Hello and welcome. I'm Suyash Maheshwari and you're watching Last Tick here on News 9, where we break down the day's action on the Dalal Street. Now, Indian markets extended their winning run to 3 sessions, with Nifty closing above the 20,100 mark on the monthly futures and expiry date. Now, for the day, markets opened in the green on the back of positive cues, but within the first few minutes, we slipped deep into the red. And at the day's low, Nifty tested 20,000 mark, but the index was able to stage a recovery from there on, and buying interest as well as short covering in the last hour to 45 minutes on the account of FNO expiry push Nifty beyond 20,100 mark, and the index ultimately settled near the day's high, just about 15 points shy of it in today's trade. Now at close, Nifty was up 0.18%, closing in above the 20,100 mark at 20,133 points, whereas Sensex ended 0.13% higher, just shy of the 67,000 mark. Now the mid cap and the small cap rally, the rally in the broader markets continued today. Also, the both mid cap and the small cap indices scaled a new record high in today's trade, and Nifty mid cap 100 was able to scale 42,900 for the very first time, whereas small cap index also inched closer to 14,200 levels. It did surpass those levels on an intraday basis, just close about 30 points shy of it. Now on the whole, November has turned out to be the best month for the markets in 2023. For the month of November, Nifty has surged by about 5.5%. The broader markets have also rallied by about 10 to 12% and has been hitting record highs on a daily basis pretty much. India VIX, the volatility index, in the intraday trade surged to 14.4 mark, and we have not seen these sort of levels in about 8 months. The index was ultimately able to recover from there and settled about 0.13% lower, below the 13 mark at 12.69 sort of levels. The market breadth also is favoring the bulls, about 1,300 shares in today's session advanced, whereas about 1,160 shares in today's trade declined on the NSE. Moving on to sectors, Nifty Bank came under pressure on the expiry day, dragged by PSU banking stocks, which were among the worst sectoral performers in the Thursday session. And Nifty Bank on the whole was trading in a broad range of about 500 points. It settled somewhere around halfway mark of this entire 500 point range. And Nifty Bank, by the way, was not down 1.19%, it was down marginally by about 0.2%, just shy of the 44,500 mark. It did see some recovery. The IT pack, which ended yesterday's trade about 1% higher and was among the best top gainers in yesterday's trade, came under some sort of a selling pressure, ended marginally lower. The Nifty PSU Bank, which was one of the reasons why we saw mutedness in the banking pack on the whole, ended about 1% lower. Nifty Pharma, which was struggling to close above the 16,000 mark, broke past those levels and in fashion to hit a new record high. It ultimately settled below above the 16,200 levels, and also the realty index rallied over nearly 1.5% to scale a new 16-year high. The auto stock index was another one which scaled a new lifetime high session in today's trade. The index on the whole was up 0.4%. But with that, let's also bring on board Mr. Amar Deo Singh, Senior Vice President of Research at Angel One. Hello, sir. Welcome to the show. Thank you for joining us here on Last Tick.
Yeah, thank you for having me.
Now, Amar, on the whole, what do you make of today's session? The market on the downside tested 20,000 on Nifty. In the last hour of 45 minutes, we saw good recovery and were able to end near the day's high. On the whole, we are just 90 points shy of the record high of about 20,222. And given the strong bullish momentum, do you expect the market to perhaps scale those levels in the upcoming 2-3 sessions?
Yeah, I would say that, one thing is very clear, that some of the technical indicators and also the macro data points have been positive. So there's no doubt about it that the bulls have the upper hand. We did see some consolidation, some sort of volatility, but that's expected in such markets, because if we go back and see somewhere around the end of October, and we are now at the end of November. So from almost October lows, if you looked at 26th October low for Nifty was around 18,837, and now it's at 20,130, 133. So that's a significant rally, almost you can say 1,300 points rally which Nifty has witnessed. And as you asked about whether we'll see the all-time high being breached, very likely yes, because most of the technical indicators, be the advanced decline ratio, be it the all-time highs, stocks, how many stocks are hitting all-time highs. So these are, and also the percentage of stocks which are trading above the 200-day moving average. That number is significantly higher, above 75 odd percent. So that clearly tells me that the broad, and also if you look at the different sectoral indices, because earlier we were seeing performance coming from the auto, the reality, then pharma, banking was pulled back because of the RBI circular on the NBFC risk weightage. But that also seems the markets have seemed to discounted that as well. And what we saw over the last couple of days is that bank Nifty also witnessing a significant up move, and all the banking stocks. And it's primarily the heavyweight stocks like Reliance, I would say Reliance and HDFC Bank. We've seen a uptrend there as well. So it's more or less, and global cues definitely have been helpful. Crude oil prices sustaining at the current levels. So these are some I would say triggers which have helped the market sustain. And we are very likely to see these all-time highs being reached for the index in a short while from now.
Now, Amar, in the intraday trade, India VIX, the volatility index surged to about 14.4 sort of levels. We have not seen these kinds of levels since March, so almost at an 8-month high. It's pretty much a trader's playground out there. But what about the retail investors? How should they approach the markets in the next 5-6 months? Because we have a lot of binary events, the biggest being elections.
Yeah, I would say that, we have to understand one thing is that markets, there will be events, there will be, I would say no day passes without some event or the other. But as you rightly said, there are major events in terms of elections, both in India and US, that would have an impact on the markets, no doubt about it. Which way. So also we have the exit polls coming out for the state elections today, post, I would say, once the voting is over. So these things will keep on happening, but overall the long-term trajectory remains strong and positive. So what it effectively means is that one needs to be both smart, while at the same time you have to be prudent, while at the same time you have to be consistent, meaning that if you are investing in say 3, 4, 5 stocks, or you are investing in a mutual fund, or you are investing in an ETF, you have to go in a staggered manner. That's very important, and ultimately that is the key. Wherein you are staying invested from and you have to look at look at from at least 3 to 5 year horizon if one is investing, because trading is very different. Trading you can enter and you can exit in a minute or in an hour, whatever your time frame, or a couple of days, few weeks. That's different. That's primarily trading. But if you're looking at investing from a long-term perspective, then you have to have that patience and the consistency in investing in a regular tranches. That's something which is very important and crucial, because you rightly said that at current levels, if one because many of the stocks have really, I would say, gone through the roof. So in terms of the appreciation, price appreciation, if you look at Tata Technologies today itself, no one expected this sort of, I would say, debut. But that has been spectacular and very handsome returns for the investors. So one needs to be looking at markets from a long-term perspective. Then that is a better opportunity and possible.
Now, since you're talking, you mentioned Tata Tech. Overall, it was a lackluster session, pretty much. Setting aside the last half an hour of trade where we saw Nifty bouncing back above 21,000. The Tata Tech and Gandhar listings stole the show, sir. At day's high, Tata Tech surged as much as 180%, making it one of the best listings, of all time and the best listing since 2021. And Gandhar Oil also pretty much doubled investors' money on an intraday basis, settled about 80-85% higher. Now, investors who were allotted these stocks, what should they do? Should they perhaps book these profits, given that the stocks have doubled and tripled in some cases?
Yeah, actually, this is a very difficult question to answer, because what generally happens is that what looks very expensive today, few years down the line, that might look cheap. So, and we've seen that in past history also. And the other thing is that generally what happens is that once an investor or a trader exits a particular stock, I would say investing more from an investing perspective, then exits a stock, then the chances of re-entry reduces. That also is one, I would say, you can say, that's also very prevalent. So, having said that, Tata Technologies is one stock. I would say those who got the allotment, I would say very lucky indeed. But at the same time, they should look at you bought something which you got and its value. Yeah, there could be corrections. There could be definitely the markets are not immune to corrections. Stocks are not immune to corrections. So we see them going up, we see them coming, and that's going to happen for a long period of time. But are you investing in companies which are going to be there over the next decades? That's very important. And are those companies in areas which are or sectors which are expected to grow at a decent pace or at a faster pace, whatever? So if these questions are answered, then staying invested makes more sense, and then getting into an SIP mode makes even better sense for such stocks.
Actually, that was my next question to you. I mean, for sure, book profits or not book profits, but can we make fresh entries after like 150-160% sort of a rise in a matter of a day?
I would say that wouldn't be a very wise, because if you look back at stocks which have generated that sort of returns, so you do see some cooling, some consolidation happening. So it could be that you are trying to just go and catch the move. So in case, because stock has already generated significant returns, more than 100% returns. Here, the best of the best, I would say, fund managers don't generate returns of 20 to 25% on an annualized basis. So once one is getting such good returns, yeah, it depends upon the individual also, whether one wants to book profits and maybe re-enter at lower levels if that opportunity is presented. But entering at the current levels for stocks which have generated more than 100 or 150% returns, I would say that then that's a personal choice. I wouldn't recommend that.
Fed Bank, although the listing was muted, the stock listed at a discount of about 2%. Would you recommend entering into that stock?
I would say this is one stock one can look at from a longer term perspective. One shouldn't expect anything from a short term perspective.
All right. Also want to get your view on the banking pack on the whole. Very interesting movement we saw on Nifty Bank, trading in about a range of about 500 points. We ultimately settled somewhere around that halfway mark of that entire range, below the 44,500 sort of levels. Given the kind of rally that we have seen in the last 3-4 sessions, where the index has surged by about 1,300-1,400 points, is it time to turn cautious, or is the rally just taking off from here?
I would say that there are a couple of things that one needs to watch out for. One is, because see, if the index is to rally, then we need to see some strong move coming from the banking space further, like HDFC Bank, it would be ICICI Bank. And if I look at in terms of Reliance also is one stock which one can look at. So what we see is that today we are seeing some sort of consolidation in Reliance, but these 3-4 stocks, they need to definitely show an up move. And what I'm seeing technically on the charts is that HDFC Bank is very close to its key zone of resistance.
Right.
Resistance. So somewhere around, if you look at somewhere around 1580, 1600, that's a very strong zone of resistance for HDFC Bank. If I look at ICICI Bank, again, ICICI Bank has a very strong resistance around the 950, 960 zone. So that tells me that there would be some pressure there. So one needs to be one looking at these particular counters, and also Reliance also appears to be somewhat caught at a higher level. There's some selling pressure which is coming in. So anywhere around 2400, 2450, that's a zone of resistance. So that tells me that at higher levels we could witness some selling pressure, but the overall broad structure of the market remains positive and strong, given the different sectors as well performing exceedingly well.
All right. And so would you say perhaps it's time to look at large cap stocks now and move out of the broader markets? Because the kind of rally that we have seen from Nifty mid cap and the small cap index, I think in November alone they have rallied by about 10-12%, on the whole up about 35-40%. Is it now time to perhaps focus on some of these heavyweight stocks?
I would say that one should, at least in the mid-cap and small-cap stocks where investors are making some decent money, they should definitely look at booking part profit, no doubt about it. Because going forward, markets are going to get even more volatile. There's no doubt about it. And if we start seeing India VIX sustaining over the 14-15 mark, that means the overall volatility has started increasing, and that's there to stay. Just a flip wouldn't matter much, but whether sustaining over that level, that's going to be important. As far as the large caps are concerned, large caps are good but the key point is that the levels are very crucial. Where do you actually buy? Because buying, say, for example, large caps like Reliance or ICICI Bank or HDFC Bank, at current levels, I would say one needs to be slightly cautious. Once it reaches these levels, then you could say some upside move, then one can go from a trading perspective. If one is looking from a investing perspective, then on corrections they can be at.
And I mean, given the kind of rally that we have seen in broader markets, are we approaching bubble territories here, sir?
I would say that's a very good question. So generally what happens is that you got to be, or investors have to be very cautious with regard to those companies which have you see the stock price rising, but are they backed by fundamentals? And today the best part is you get to see, or you can easily get to see all the fundamentals, and most importantly you have to look at the track record of the company. How's the company been performing quarter on quarter? What are the sales of the company? What's the profitability of the company? What's the growth rate of the company? So these are few important parameters, and the PE ratio. So these are easily available everywhere. So investors should definitely look at such companies and then get into it, because otherwise what will happen is that they'll stand holding stocks where the companies really haven't performed, but the stock has outperformed. So you need to be cautious and stay away from such stocks.
That's Mr. Amardev Singh for you, sir. Thank you for joining us here on Last Take. Appreciate your thoughts.
Thank you for having me on the show.
But with that, we have completely run out of time on this edition of Last Take. Keep watching News 9.
चलो जी, कौनी मिले वोट जी।